Do you want to achieve wealth and passive income through property investing? PK Gupta helps a community of over 10,000 investors achieve passive income by buying top 5% growth and simultaneously positive cash flow property using data, without wasting months doing research, spending weekends at inspections, or dropping $15,000 on buyer's agents each time. So, if you're overwhelmed with information overload but don't want to drop $15,000 on buyer's agents each time, check out PK's website, consultingbypk.com.au, and learn to build passive income through data. This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, Grace Ormsby here. Welcome to a brand new episode of Smart Property Investment Show. I can't believe that it's less than 2 months until Christmas. Where on earth has this year gone? Obviously over in the eastern states, everyone's starting to come out of lockdown now. Things are starting to go back to a little bit of normality. Borders reopening, everything's starting to happen, but it's a little bit of a different story over in WA, where today's guest does come from. Sam Lindkvist, welcome to the show. How are you?
I'm well, thanks, Grace. Thanks for having me on.
So you're in Perth. You haven't really had any lockdowns all year, have you?
No, we've been pretty lucky. And even if we had, I think it's been 1 or 2 days here and there, we've had the lockdown, but we've been extremely lucky.
Sam, you're obviously on here today. You've got a few properties in your back pocket, in your portfolio. What sort of got you interested in property investing in the first place? Because no one just sort of wakes up and goes, that's what I'm going to do, investing in property. So where did it all start for you?
That's actually a really good question. And I've been asked that before, but I'm not 110% sure. I know growing up, my parents bought the property next door and they rented that out. So I think from seeing that, maybe I built an idea from there, and then moving forward, I always knew it was a great way to build wealth, and a lot of people did it. So from there, I just expanded from that and looked into it further, and here we are.
So where exactly, because you're not from WA, are you?
I am, yeah.
You are. Okay.
I'm from WA, yeah.
But you don't have your properties in WA?
I don't. They're all over east, yes. Yeah, other side of Australia.
So why did you go over borders, especially? It's a funny question, I think, to be considering, especially now when there are such concrete borders between states, but it obviously wasn't when you did start investing.
Yeah, that's right. Yeah, so initially looking at the Perth market, when I started investing back in 2017, it wasn't a very popular market. I think we're still struggling coming out of the mining boom, and vacancy rates were high. So I decided to look elsewhere, and I initially looked at Queensland. The yields were quite good, and I could see some growth there. So that's why I decided to head over east.
So talk us through that first property then, Sam. How old were you when you did purchase that, and what sort of led up to that decision to actually go there? Because it is a big deal to buy any property that's not in your immediate vicinity, but to be going interstate is a pretty big jump.
It is, yeah. It was pretty daunting. I thought initially, am I doing the right thing? What am I doing here? But the first property was a 2-bedroom unit in Helensvale. So that's a suburb of the Gold Coast. Around the time, it was back in 2017. So I think I was about 22, 23. The reason I bought there, they had the Commonwealth Games coming. So they were spending a bit of money on infrastructure. The yields were good. The vacancy rate was good. And at the time, I was only an apprentice, so I couldn't afford a whole lot. So the purchase price was quite good as well. So that played a big part.
Commonwealth Games seems like a funny thing to think about now, but Queensland's actually secured the Olympics in 2032. I'm assuming you've seen some pretty good gains on that property so far, considering just how much growth has been seen up in Queensland over the past 18 months since COVID. How is that tracking at the moment, and is it what you were expecting?
It's going pretty well, especially over the last year with all the demand we've seen, especially through southeast Queensland. So it's been quite good. Being young and buying my first investment, I didn't put a whole lot of thought into the initial purchase, but it hasn't been too bad so far. I think I paid $265 for it, and I've been speaking with an agent who sells in a similar complex, and one's gone under contract just over the weekend with a 4 in front of it. So it hasn't been too bad for, say, 4 or 5 years.
Yeah, definitely. Have you used any of the equity from that property for any of your other purchases?
I have, yes. So a little while ago, I used some of that equity to roll into my second purchase. Yeah, that's right.
Okay, so when was that second purchase?
So this was back in 2019. So I bought this one with my partner, Lauren, at the time. Again, this was in Southport, another suburb of the Gold Coast. So this one was a bit of a different one because it's actually 2 units on the one block, upstairs, downstairs. So the rental yield was quite good on that one as well. So, yeah.
For sure. How did you really get involved in the Queensland market? Was it a matter of going over there, talking to a few people or buyer's agents or just knowing agents on the ground? How did you go about that?
Well, I think at the time I was looking at Melbourne and Sydney, and as you know, as everyone knows who's involved in property, they've had some quite serious growth around that period. So I was probably maxed out in that regard, and the yields weren't as great. So that's why I went towards Queensland. And then, initially I did go over there myself. I viewed properties, viewed the area, spoke to agents, and I tried to speak to as many people as I possibly could to get a better insight of the market and, help me when I went to purchase.
For sure. What kind of research went into that? Did you have a mortgage broker or did you have anyone in your corner that you could be talking to about this kind of stuff? Because it as we've already mentioned, it is a daunting process, and it would be all the more so being only 22, still an apprentice and doing all of that.
Yeah, that's right. So mortgage broker was huge for me. I would recommend to anyone using a mortgage broker. It's best for them they can help you out massively with the rates and different loan types and everything like that. So I used, a mortgage broker, but a lot of it was my own research. So looking at past sales, what's sold in the area, all that standard stuff that you sort of look at when you look to purchase an investment property.
And you did mention that, seeing your parents actually do the same thing did sort of motivate you a little bit. How pivotal have they been in this process? Or is this something that you've gone, no, this is my own thing, I'm doing it by myself?
Yeah, so they sort of let me go on my own, really. They've been there along the way to sort of have their opinion and everything like that. But it's been me mainly from the start. Yeah.
We're going to take a quick break there, Sam, but after the break, I want to hear a little bit more about what the purpose of property investment actually is for you. We'll be right back.
Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
Welcome back to this episode of the Smart Property Investment Show, where I'm joined by Sam Lindkvist, Perth-based. Sam, what do you actually do as a trade? Because you've come through the apprenticeship now.
I have. That was quite some time ago now. So I'm a plumber actually over here in WA. So that keeps me out of trouble. And we're quite busy at the moment, as all trades are, and everyone really in general.
How much has that sort of played into what you're looking at when you do look at properties? Do you pay particular attention to, the piping and all of that?
I sort of leave that up to the professional, the building and pest inspector. And obviously not being where I've purchased the property, it's quite difficult. The only annoying thing is a couple of my properties have had plumbing issues, and it's a pain that I can't go there myself and fix it. I've got to pay someone to do it. So that's probably the biggest pain with it.
Absolutely. Sam, before the break, I did get you to think about the question of why you actually got involved in property investment. What is it for you that makes it such an attractive proposition and wealth builder?
I think I'm not going to say it's easy, but it doesn't take much to get into it and get moving. There's lots of different avenues you can use to get into the property market. And obviously you've got the cash flow aspect of it as well. So if you buy well, you're not really out of pocket, to be honest, if you buy with solid cash flow. And obviously over time, the property market's done well, and moving forward, I believe it's going to do the same thing. So that's what really appealed to me when I was looking at getting into it.
And by the sounds of it, it is quite a passive investment option for you, being that you haven't chosen anything nearby where you actually can do the plumbing and all of that yourself. when you have chosen properties so far, especially talking on those first two that we have run through already, are they ready to go? Are they the kind of properties that are just sort of set and forget?
Yeah, they are. Yeah, so they've both just had tenants from day one to walk in and rent them out, and I haven't had any vacancies with them. So yeah, they are ready to go. Moving forward, I'd like to be able to do some work to them. There's probably some tidying up I need to do along the way. But yeah, other than that, ready to go, and they sort of look after themselves, which is good.
So what's the ultimate end goal from this property investing? You've obviously got more properties and we'll talk on them a little bit later, but what are you hoping to get out of this investment style?
I think moving forward, as I get a bit older, it's time, really. I'd like to get some time back. I don't need flash cars or a big house or anything like that. I think if you could free up some time to maybe have a 3-day weekend each week, spend more time with family and friends, I think that's probably the ultimate goal. So obviously building up a residual income from property, which would be beneficial for me, I think.
For sure. So you've got these two properties already that we've talked about, the 265K first purchase in Helensvale. Then you've got the second 2-unit block in Southport. Before we go any further, what attracted you to that Southport purchase? Because I feel like you would have had to have been pretty lucky, right timing in the market to get that kind of purchase.
Yeah, it was pretty good. So again, calling around agents, seeing what they potentially have coming up. So that was my game plan there. And Southport, the CBD of the Gold Coast, there's quite a bit of infrastructure going on there. And you've got health and knowledge precinct around the corner with a massive hospital and a university. So, and doing my research leading up to that one, I noticed the current owners paid $480 for that in 2011, and I picked it up for $530 in 2019. So I thought there was some growth already built in there because, yeah, 50,000, they sold it for only 50,000 more 8 years later.
Absolutely. And what's the rental return on that like?
It was quite good. So it was $675 from, day one. So I'm not sure what that is yield-wise. You might be better at math than me, but yeah.
I'm sure some of our listeners will have already worked that one out in their heads. But, I mean, that's a pretty positive geared purchase by the sounds of things off the bat. Like, You said it was a sale that you went into with yourself and your partner. How long was the lead up for that? Was it one of those things where you went on a holiday over to Queensland and picked it up, or?
No, it wasn't actually. So I went over to Queensland before I bought my first one, but buying this one, I leveraged off my property manager. So they can be fantastic. So I got them to go through and look at the property for me. And yeah, they said it was a done deal. The numbers stacked up for me, so I went for it. And it's I'd probably say that's been my best purchase so far.
Amazing. And to have the property manager in your corner like that, how did you go about building the relationship to be like that?
I think obviously the property managers like to help you out because they know they're probably going to get the business from it. So they're more than happy to help out. And if they're local to the area, normally they're out doing inspections. So it's not really much for them to do. So yeah, no, it was really good. And we've built a good relationship. So they look after both those properties and they're happy to help me out whenever they can.
Awesome to hear that, Sam. So let's go on to the next property then. What was that third big purchase that you made?
So the third one was actually, I swapped over. This is actually a commercial investment, again in Queensland. So this one's up on the Sunshine Coast, Coolum Beach. So it's a little industrial unit. The purchase price was quite low, only $250,000, but that rents quite well. That was mainly a cash flow deal for me. So I knew as I bought more property, the finance would become difficult. So I wanted to buy a cash flow dominant property to help me moving forward.
There's some real great diversification going on there. Was that the plan from the beginning, or have you just picked up things as you've gone? Like maybe I need to be, looking further than just residential.
Yeah, I'll be honest. I don't think there was too much of a plan to begin with, but definitely as you move on and you buy more property, you definitely start to build a plan. You see what works and what doesn't work. And yeah, so it's just evolved over time, I think, for sure.
And for being only your third property, a lot of people are, they would find it too intimidating to be going into the commercial side of things. What were the biggest differences for you going down that route compared to residential?
There's just a lot of the financing aspect is quite different. There's a few more hoops to jump through, and then there's a few more things to look at. You're not looking at the same things you would when you're researching in residential. You're looking at the business that's in the unit itself and how well they're doing and what's going on in the area as well. So there's a few different aspects you have to look at to pick the right one.
So when did you pick that one up?
That was middle of last year. So right in the middle of sort of when COVID really taken off. So yeah, picked that one up. I think it settled August last year.
Was that a concern for you, COVID, at all with regards to that?
No, it wasn't. Yeah, like obviously doing the research and checking the numbers, it wasn't too bad. Yeah, I think if the numbers stack up and you're pretty confident, I think go for it. And yeah, that's been a great purchase as well so far.
So what does operate out of that unit, if you don't mind me asking?
So I've just had a tenant change. So initially it was they were fishermen. So they would go out, catch fish and come back, and that would be their shop where they sold fish. So they've moved on to bigger and better things. And now a gourmet pet food business is in there. So quite interesting. I
guess they're both pretty COVID-proof businesses, aren't they? They're not going to shut up shop.
Yeah, that's correct. So that's, again, gives me a bit of confidence as well.
What is it zoned for? Like, does it have to stay along that food kind of side of things, or is it, open to whatever?
Yeah, I think it's open to whatever. It's an interesting one because there's actually cool rooms in there, cool room and freezer in there, which I picked up with the purchase as well. So moving forward, it'll appeal to someone who's got, say, a food production-based business.
Definitely. And up there, it is quite a popular area for foodies, isn't it? With Noosa and farmers markets galore up there. But Sam, I think looking at what we talked about before this episode actually started, you've got one more property, is that correct?
I do. I've just purchased that recently, so it doesn't settle until the start of December.
Okay, we're going to take a quick break there, and then I want to hear all about that latest purchase. We'll be back in a second.
Are you wondering where to buy an investment property right now? Why not let buyers take the guesswork out of it? We can find you the right place on or off market at the right price. An investment professional from our national network of buyers agents can help you save time, money and stress and deliver you a tailored solution. Talk to us today. Call 1800 975 051 or visit buyersbuyers.com.au.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Sam Lindkvist, Perth-based Eastern States investor. Sam, before the break, you alluded to that last property that you purchased that's still in the works. Can you talk us through that?
Yeah, so this one is I've moved away from Queensland on this one. So we've moved to South Australia in this one. So Adelaide, just north of Adelaide in a suburb called Brahma Lodge. So we've gone back to residential. So that's a 4x2 house on a 600 square corner block. And I actually picked that one up off market. So it wasn't online at all. So that was very beneficial in this market.
Yeah, definitely. And Adelaide is having a bit of a moment at the moment. Was South Australia something that you had been looking into previously? How did this opportunity come about, especially coming as an off-market purchase?
Yeah, so I was initially looking at Queensland again, but for me, the yields weren't quite stacking up. And I think Queensland was extremely hot. So everyone had moved off the Melbourne-Sydney bandwagon and headed up to Queensland. And so I was finding it really hard to get anything there. So I had a look in South Australia. And just, calling up agents, just seeing what they've got coming up, if they got anything off market. And by chance, I called this agent about another property, and we got along really well from the start. And he said, look, I've got another property coming up. It's off market. The owners want to sell it off market. If you can get someone through to have a look at it, we'll go from there. And that's how we got onto that one.
There you go. So did you jump across to South Australia for that one, or?
I didn't. I had someone on the ground again to help me out. So they went through and had a look through it. And the owners of the property were quite surprised. They weren't expecting it to go so quickly because we went through, it stacked up, I put an offer in, and they were like, oh, well, wow, I didn't expect it to happen that quick. They had a night to think on it and then they accepted it. So it worked out really well.
How good. And with those off-market deals, is that something that you sort of, do look to achieve now? Like, has that sort of cemented it as an ideal way to acquire property?
I think it is. I think it is. If you really put in the hard yards to get to know your agents and constantly speak to them, don't pester them, obviously, but keep in touch with them and build rapport with them. I think that's beneficial. Just to put it into perspective, a property around the corner that I put an offer in just before that one, that had 112 offers on it.
Oh my
gosh. Ridiculous. So to go from that to an off-market deal where I was literally the only one negotiating was fantastic, especially in this market as well.
And so what have you got on that at the moment? Well, it hasn't settled yet, has it? So you're still waiting to put tenants in?
Yeah, so currently the owners are still in there, and that worked in my favour as well because this area is quite owner-occupier dominant. So I think they had two other people putting offers forward, but they were both owner-occupiers. With the current market, they were a bit worried about moving out, not having anywhere to go. So for me, being an investor, I offered a rent back to them or a extended settlement because I wasn't too concerned in that regard.
Yeah, especially if they weren't planning to offload it as quickly as they did. How long do you think they'll stay in there before you need to actually start looking for tenants?
Well, I've just found out recently that they've already found a new place. So luckily they found a new place. So probably middle of November, we'll start looking for tenants. And again, like everywhere else, the vacancy rate's quite low there. So yeah, I think we'll find tenants quite easily.
Especially in an owner-occupier dense area, a lot of people would be trying to move into the area. So what are some of the specs on that? What did you end up paying for the property?
So I paid $450 for that one, and I've had a rental appraisal on that one for between $450 and $470. So I think that's roughly just over a 5% yield, around 5.2% yield. So again, that's what I wanted, a solid, strong cash flow to cover all expenses, and I think I've found it with that one for sure.
Yeah, pretty good going there. Because you're a rentvestor yourself. You don't actually own where you live in WA, do you?
That's right, yes. I rent here over in WA, yeah.
Was that, a planned decision? Is it just that it happened by chance in that way? Like, what do you see in the Perth market? Why haven't you actually gone for it?
I think it was planned to do this because I think if you don't get me wrong, it's fantastic if you buy your own property, but if you buy one, it's looked as bad debt, I suppose, from the banks moving forward. So if I bought a place I wanted to live in and then went to invest, I probably couldn't get to where I am today if I went down that path initially. And obviously I want to buy a house to live in eventually here, and whatever it is at the time, I'd like to take advantage of the first homeowners grant. So if I was to buy an investment property here, I would lose that. Me and my partner Lauren would lose that. So that was another part of the plan too.
So how big is your portfolio now? What are we talking?
Numbers wise? Yeah. So the 4 properties, it's hard to get a value on them at the moment.
Just because the property market's going so crazy.
Yeah, it's unbelievable. But I think it's around the 1.85 to 1.9 million for the 4. Which
is pretty good going for now and so strong because you're still only young. How old are you now?
Just turned 27 a couple of months ago, yeah. So
you're still, having only spent 4 or so years in the property investment space, the world's your oyster, really. What's next?
What's next? As I said earlier, I think that the 3 properties I could potentially do some work on, tidy them up a bit cosmetically, and again, achieve a better rental yield, hopefully push up the growth. But right now, I don't really need to worry too much about it the way things are. But it's good to have that in my back pocket. And I probably struggle financing from moving forward. So if I can lift the rental, build a bit of equity, that's going to help me with the banks as well. So I don't want to stop. I'd love to keep going and build out a bigger portfolio for sure. How much time do you spend doing this, each week? Or is it something that once you buy a property, you don't really need to worry about what's going on for a little while? Like, how do you dedicate time or resources or just sort of place a value on the work that you're doing in property investment? Because you have a job. It's not like this is not just your full-time work, as we see some of the investors come on the show that are doing. You're obviously a plumber by trade, like you're working most days, I'm assuming. Yeah, 5 or 6 days a week. So it can get tough. Like sometimes you think, wow, there's not enough time in the day. But generally at night, I like to allow a bit of time, whether it be 20 minutes or an hour, where I I really enjoy all things property. So I'm constantly reading. I've got a million subscriptions on my email, so I'm always getting stuff sent through. So yeah, always keeping my finger on the pulse, that's for sure.
So you did say you might have a little bit of trouble with financing coming up. What are you looking at next? You know, is it 1 year from now? Is it 2 years from now? Is it after you do some cosmetic stuff on the other places? You know, where do you see your property journey actually going from here?
Well, I might, once this one settles, I might look into sort of what available equity I may have and then reassess from there and go back to the mortgage broker and see if I can get any more money. And then, yeah, if I can, then the researching starts again and we go from there and try find something else. But yeah, it might be commercial, it might be residential, I'm not sure. Yeah, it depends.
That's a pretty good position to be in, though, that you can be that flexible with what you're doing.
Yeah.
How much is that, you know, in that plan to just see what comes up? Or how much is it, you know, trying to balance out the amount of commercial interest that you have as with the residential interest?
I think you need to create that balance. Otherwise, if you don't formulate a bit of a plan, you might get stuck somewhere along the way. So if you buy too many residential and the yields aren't quite there, you might get stuck a bit quicker than if you, say, throw in a cash flow deal as well that really propels you forward and helps with the banks. There's probably a few interest rates as well that are coming off fixed that I think one of them, it's got a 4 in front of it, which is unheard of in today's market. So hopefully once that comes off, I can free up a bit of cash flow there as well. So yeah, that will help moving forward.
And are you looking to buy and hold with all the properties that you do take on, or will there be more of a look at capital growth and gains in the future?
Definitely buy and hold. Yeah, earlier in the year, I was looking at selling my first property because I thought to myself, it probably wasn't the best one I could have purchased at the time. And I thought if I was going to sell, now's probably the time. But even that one, that's been outstanding, like with the agent telling me that there's one in the complex selling with a 4 in front of it. So I probably hold off on that now and just hold on to it because the cash flow is quite good as well. So yeah, at this point in time, just hold on, not looking to sell any, that's for sure.
Was that before or after the Olympics Games announcement that you were thinking of selling? Because that would have, you know, just with how hot the current Queensland market is at the moment, as we've talked about before, people are saying that that's going to propel the growth for a decade and longer, which must be music to your ears.
Yeah, well, that's right. Yeah, it was I think it was before as well. So that would have played a part as well because that's going to be massive for Queensland in general. And yeah, still 10 years away. So the lead up's going to be quite big with all the money they're going to put towards it. And it's just going to be fantastic for Queensland for sure.
Can we flip back now across to Perth? Because we talked about it not being the most ideal market for you to be buying in. But, you know, there has been some murmurings in the industry that it might not stay that way for much longer. It could have its moment soon. Is that something that you're anticipating or hoping for? Or, you know, how do you actually reconcile what's going on over there with just being a rentvestor and looking eastward?
Yeah, I should, but I don't look a whole lot into Perth, which is funny because I live here, but I have a little bit more recently, but it seems to be doing quite well. Obviously, going back 2-3 years ago, I think the vacancy rate was quite high and that's just fallen off a cliff and prices are starting to move in a lot of areas here as well. So it's good to see after such a long time with limited growth and not much rental appeal for it to be moving forward.
For sure. And you obviously know your stuff. I do have to ask before I let you go, Sam, what's been one of the biggest lessons that you have learned being a property investor? And are there any mistakes or errors that you've made that you go, now that I know that, I'm never going to do it again?
That's a really good question. I think with me, when I looked at my initial purchase, I got quite lucky there to achieve some growth because I probably didn't do enough research into it. Being a first-time investor, I probably should have. So advice there would be to really, put some time and effort into, I know it's hot, the market at the moment, so it's quite hard. You get a bit of FOMO, but I think if you're looking at your first purchase, I think it's crucial that you really sit down and look at all avenues and look where you want to be, say 4th, 5th property rather than concentrating on the first property. So there is quite a bit to look at for sure, but that would be one piece of advice, definitely.
And speaking of having 4 or 5 properties, do you have a ballpark figure? Is there a goal that you do have in mind of a certain amount of properties that you'd love to be able to say that you own?
Not necessarily, no. I don't know how I'm going to put that, to be honest. I think it would more be the number of the worth of them. I think it's more quality over quantity, really. So if I have a solid base of quality properties, I think I'd be happy with that, with good rental yield. It doesn't need to be 50, 60 properties. I think, 5 or 6 solid ones moving forward that I can pay down over time would be perfect for moving into retirement in my later years.
Well, it sounds like you've got the perfect portfolio set up at the moment to achieve that kind of thing. And really, the areas that you've been, that you've set down those routes are only going to go up in the coming years. So it's going to be very exciting for you. Sam, thanks so much for sharing your experience with us. And I can't wait to see where you go to from here. So please stay in touch. We'd love to do a follow-up episode down the track.
Yeah, no, definitely. Thank you so much for having me on. I really appreciate it. And it'd be great to catch up on a future episode for sure. Thanks.
Best of luck with that settlement of that South Australian property, and let us know whatever the mortgage broker says after that. Again, thank you so much.
I will. Thank you.
If you like this episode of the Smart Property Investment Show, please like or review us on whatever platform you're using to listen in. This is what shapes future episodes, future plans, future guests on this show. And if you do have any questions or you think that you might make a great guest on an upcoming episode, reach out at editor@smartpropertyinvestment.com.au. As always, stay up to date with everything smart property investment related on the website, smartpropertyinvestment.com.au, and on our social media, Facebook, Twitter, and our LinkedIn. Until next time, stay safe and well. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.